Good morning, my dear students. Today I am going to explain the day 7 assignment. Okay. So actually, first of all, you should know the format very well. If you know the format very well, you can solve the problem easily. So today I am going to explain the illustration number 20. Okay. So now I am going to read problem number 20. Based on that, you have to solve practical question number 20. Okay. The trainee accountant of John Smith and Company Limited, who has gained a little knowledge of accounts, had drafted the following balance sheet. So balance sheet for the year ended 31st March 2018, assets amount, liabilities amount. So he gave land and buildings, fixed deposits accepted, furniture, goodwill, inventories, Sunday creditors, machinery, cash, bills payable, bank, general reserve, caution arrears, securities premium. So capital 18,000 equity shares of rupees 10 each, fully called up. So preliminary expenses 10% debentures, provision for taxation, statement of profit and loss account, credit balance account, investments in G Limited, bills receivable, debtors, unclaimed dividends, share for future 500. Then additional information, proposed dividend for the year 31st March 2018 was rupees 14,000. You are required to redraft the above balance sheet as per Schedule 3, Part 1 of Companies Act 2013. That means, so we need to redraft the balance sheet as per Schedule 3, Part 1. Okay, as per, so that is Schedule 3, Part 1 of the Companies Act 2013. Based on that, you need to prepare. So I told you already, while reading the problem itself, you should know which item will comes under which head. You must know. Okay. So based on that, for whatever the items which is required, notes to accounts, you need to prepare notes to accounts. First, you have to write the balance sheet format first. I told you this is a format based chapter. So first you can draft a balance sheet. That means you have to write the format of the balance sheet. Then below that you can prepare a notes to accounts. So which is required notes to accounts. For that you can prepare a notes to accounts. Sir, how I know what are the items are required to prepare the notes to accounts? Suppose under the same heading, that is subheading, more than one item will comes. That means at least 2 items will come under the same heading. For that you can prepare a notes to accounts. Suppose only one item is there. So there is no, that means more than one item is nothing is there. Then for that you need not prepare a notes to accounts. Straight away take that value into the main balance sheet. So now I am going to read. So land and building, it will comes under tangible assets. Fixed deposits accepted, it will comes under long-term borrowings. Furniture, it will comes under tangible assets. Goodwill, it will comes under intangible assets. Inventories, it will comes under inventories. Sundry creditors, it will comes under trade payables. The next machinery, it will comes under tangible assets. Cash, it will comes under cash and bank balances. Bills payable, it will comes under trade payables. Bank, it will comes under cash and bank balances. General reserve, it will comes under reserves and surplus. Calls in arrears, it will comes under share capital. In that you have to deduct the calls in arrears. Securities premium, it will comes under reserves and surplus. Capital, it will comes under share capital. For this you need to prepare a notes to accounts because calls in arrears also is there. Preliminary expenses, so this is you have to deduct from either securities premium or general reserve, so that while preparing the notes to accounts of reserves and surplus, so in reserves and surplus securities premium is there. In that securities premium you may deduct that amount or you may deduct from general reserve also, but anyhow it will comes under reserves and surplus. This preliminary expenses you have to deduct. Okay, so preliminary expenses means what? Those expenses which are incurred at the time of incorporation of a company. So at the time of incorporation of a company, అంటే కంపెనీ ఇన్కార్పొరేట్ చేసినప్పుడు ఏవైతే ఎక్స్పెన్సెస్ ఇంకర్ అయ్యారో వాటిని ప్రిలిమినరీ ఎక్స్పెన్సెస్ అంటారు. దోస్ ఎక్స్పెన్సెస్ ఆర్ కాల్డ్ ప్రిలిమినరీ ఎక్స్పెన్సెస్. సో దట్ యూ కెన్ బి డిడక్టెడ్ ఫ్రమ్ ద either from securities premium or from general reserve, or if that amounts are not sufficient you may deduct from surplus also. Okay, 10% debentures, next item, it will comes under long term borrowings. Provision for taxation, so this will comes under short term provisions. The next statement of profit and loss balances, credit balance, that is profit, so it will comes under reserves and surplus. Investment in G Limited, we are making the investment in another company, so it will comes under non-current investments. Then bills receivable. Okay, so bills receivable it will comes under trade receivables. Debtors, it will comes under trade receivables. Unclaimed dividend, it will comes under other current liabilities. Then that is 11,000. The next share for future, so share for future it will comes under share capital. What you have to do, this share capital you have to add it to share capital. So for capital you have to deduct the calls on arrears, you have to add the share for future, so then you will get the net amount of share capital. That amount you need to takes into main balance sheet. Okay, so the next one, proposed in additional information, proposed dividend is given. Proposed dividend for current year 14,000, it will comes under contingent liabilities. Okay, that you have to write below the balance sheet. Okay, this is the main aspect, but based on this you have to solve the practical question number 20. Okay, so thank you.